over the homeworks and then go over levels again, and just a little bit more detail on the trade setup that I showed you guys yesterday. All right, so let me just share my screen. All right, so I'm just waiting for WhatsApp web to load. It literally loaded now. I don't know why it's reloading again. Recording as well. All right, so a lot of you guys missed the call we did on Tuesday about levels. So when it comes to identifying levels, I identify my levels just a little bit differently from how a lot of people would identify their levels, because for me it's all about being specific, because I trade, my focus is on trading away from peaks from level 1, right? So it's very important I'm able to identify peaks, and also I'm able to accurately identify level 1 trades as well. So I'm going to show you an example of basically how you should be plotting out your levels, how you should be identifying your levels. But to do this, let me just draw a quick picture of how the levels actually work, because one thing you need to understand is when you're looking at a picture of us drawing levels, like higher highs and and higher lows, and lower on the uptrend, and then you have lower highs and lower lows on the downtrend, right? It's picture perfect, right? It looks really, really good. Now, when you come to the charts, you wouldn't always get a picture perfect trend like that. Sometimes you have, level 1, and then level 2 consolidation goes into level 1, and it's just all over the place. But you just need to learn to clean it up and actually look at what's actually going on, right? Because price always moves. The reason we have the structure of levels is because it really gives us an idea of when to get into the market and when not to get into the market. So the first thing you need to understand is that we plot and identify our levels from consolidation to consolidation. The reason being is because after each level, a consolidation takes place. So let me just show you what I mean by this. So let me just find like a really vacant part of my charts. Let's say down here. Okay. So after let me just annotate. So let's imagine you have this, right? So you have your peak formation low, right, which is taking place. Now, coming out of your peak formation low, right, you're going to have your level 1, right? This is your level 1. Now, after your level 1 is taking place, you're going to have a period of consolidation. And of course, we're expecting or anticipating, it doesn't always happen, but this is one type of trade that we're anticipating, kind of a stop hunt that takes place outside of your level 1 consolidation before then moving into level 2. And then after level 2, you have a period of consolidation, and then price moves into level 3, the third level, right? And then at level 3, you're anticipating, right, another peak. So this is of course a trapping activity that's taking place. So we have trapping activity down here. We have the inducements, right? Then we have another trapping activity, and then after that, then you have the shift, right? The shift coming out of this level 3 peak. Now, what you need to understand, of course, is when we're identifying and when I'm plotting the trends, what we're looking at is we're identifying the highest point that level 1 reached, and then we're drawing a box around level 1 to the lowest point in the consolidation that level 1 consolidation was. This is now going to be our level 1 consolidation zone. Now, the moment price comes out of this region, we're now in level 2, right? So you know that, okay, this is a box, this is a level 1 consolidation zone, and moment price comes out of this region, we're in level 2, okay? So what you now do, so from level 2, the highest point level 2 reached, you're going to draw a box from there to now the lowest point that level 2 consolidation was. That's your level 2 consolidation zone, okay? Now, from your level 2 consolidation zone, the moment price leaves this little box, we know that we're now moving into a level 3 phase, okay? Now, level 3 trapping activity takes place, and then you get the shift. Now, this is where a lot of people are getting confused, because I said 2 things can happen after the shift. 1 or 2 things can happen after the shift. So does anyone want to tell me what they are? Those that were on the Tuesday call. What are the 2 things that would happen, that could happen after the shift is taking place from the top? Does anyone remember? So you can either put in the chat or you can unmute yourself and just let me know. Exactly. So you can get either a reversal or you can get a continuation, right? So you can get a reversal or you can get a continuation. So you can have a scenario where this becomes, so level 3 now becomes your new level 1, right? And then after this, you're anticipating a consolidation, a stop and outside of that, moving into level 2, and then a consolidation, a hunt outside that into level 3, into another peak, right? This is one possibility. Another possibility is where price comes out of this region. So we have a shift from this trapping zone. We have a shift from there, right? And then after this shift, you're gonna have a reset. So you're gonna have a reset where price forms a new anchor, right? So remember, this was our first anchor. This was our original anchor. So obviously we're trading away from that. We're trading away from this anchor down here. Now price forms a new anchor and continues moving upside. So this now becomes our level 1, right? And the trend continues. And then we move into level 2, and the trend continues upwards into level 3, right? And then we reach level 3 peak formation. Now at level 3 peak formation, again, you have one or two things that can happen. You could have another anchor, right? And then a continuation on the upside. Or you could have a reversal where price moves into level 1, and then you have a consolidation into level 2, consolidation into level 3, consolidation. Now, the best way to identify your levels, like I mentioned, is to identify the consolidation zones. If you know how to identify the highest point the level reached, right, and then you draw a box around that, then all you need to do is wait for the price to shift outside of this region for you to know that you're in level 2. So let me just show you guys an example of how this works on the charts. So let me just clear this up. Have you turned off your PC? Right. Yes. Perfect. All right, so the homework should have loaded by now then. So let me show you guys how this works. So let's go on Euro USD, which is our go-to pair most of the time. Now, Euro USD, you're gonna go in H1. I always recommend this, guys. You know, when you begin trying to find your levels, you can begin finding your levels in H4. You can begin finding your levels in H4, then move it down to H1, because understand the levels is taking place on every single one of these time frames. So you have your levels on daily, you have your levels on H4, you also have your levels on H1, you have your levels on M15. Now, they're not all necessarily going to be in the same place. So just because you're in level 2, you know, on a bullish move on the H1 doesn't mean you're also going to be in level 2 on an M15. You could be in level 2 on an H1, and also you can be in level 3 on an M15, right? So this is why it's very important you understand what level you're in on the different time frame. Guys, can you hear me clearly now? Guys, can you hear me? Is my voice still crackling?
It's quite cracky, mate.
All right, the voice is still crackling. Something needs to close. All right, guys, how's this now? Is it better now, or is it still crackling?
All good, man. Thank you.
It's much better now. I stabilized. Perfect. All right, so this is the example that we gave on Tuesday, right? This was Euro USD, and this is on the H1. So the first thing, when you're trying to identify your levels, to know where you are right now today, you need to know where price has been, right? And the best way to know where price has been is to go and find the most recent anchor points that took place, the most previous anchor point that took place. So you want to go back, you want to look to the left. You know, when was the most recent anchor that took place? And then coming out of that, you had, of course, your intraday cycle moving into another anchor. So where we started out, if you guys can see this right here, those that weren't on the call on Tuesday, was up here, right? This was our anchor that we looked at. So we started from here on the H1, okay? Now, when you have an anchor, what is the first thing that you're looking at? What are the conditions for a peak formation? Does anyone want to list or name the conditions that we mentioned for a peak formation? what are the conditions you're looking at for a peak formation? How do I know that this is a peak formation, for example? Like, what are the confirmations I'm looking for? So RSI extremes, fantastic. So we need to know that we need to look at the RSI. Is it at an extreme level over the 20%, around the 20% level? EMA finding out, that's another condition, fantastic. What else? Not the 1350, Eric. 1350 crossover is not a confirmation of you being in a peak formation, right? You're in peak formation from RSI extreme, EMA finding out. And of course, you know you're in a peak formation as well. If on the previous days, you've had at least 3 to 4 days of price rising up towards that region, towards the area in price. So this is clearly a peak formation. Why? Number one, where is RSI?
Some divergence there.
Sorry?
You got some divergence there as well.
Exactly, right? The RSI divergence is another condition we named, right? So we have RSI sitting at an 82% level. So on the high side, 82%, right? That's a very, very overbought region. On top of that, we have massive divergence that's also taking place. So all of this is trapping activity. You know, they're really pushing, driving price upwards in order to, because remember, this move is an inducement move. The purpose of this move is to induce traders to go long. You know, the market makers are inducing and inducing and inducing until they have enough volume before they shift. Now, once they have enough volume, what happens after that is they shift, right? So all of this is trapping activity that has taken place. Now, what is our trapping pattern? You guys already know this. You know, we taught this in the workshop. A trapping pattern, it looks like an M or looks like a W, right? And every single step of this is to induce traders to take a position before shifting away finally, right? So we had that trapping pattern take place here, and then we finally had a shift. Now, how do I know that I'm coming out of a peak formation? What is the first thing I'm looking at coming out of a peak formation? What is the first thing I'm looking for coming out of a peak formation, right? Does anyone remember what is the first thing I'm looking for coming out of a peak formation? Fantastic, 1350 crossover. I'm looking for my level 1 confirmation. So I'm looking for that, I'm waiting for that 1350 crossover coming out of the peak formation. And I had it here on Euro USD. So this is where I drew the box. So let me just clear this. So I circled the 1350 crossover. On top of that, I also drew a box around our level 1. Now, what am I looking for coming out of this? I'm looking for the lowest points where level 1 reached outside of the 13 EMA before coming back and interacting or closing above sometimes the 13 EMA, right? This is what I'm looking for. I'm looking for price coming away from the 13, back towards the 13. This confirms my end of level. This is officially the lowest point of my level. After that, what I'm anticipating is now consolidation. So this is my period of consolidation for level 1. Now coming out of level 1, right, into level 2, what am I looking for? Again, looking for the lowest point price reaches before moving back towards our 13 and closing, either interacting with or closing above our 13 EMA, which it did, right? So this is officially where our level 2 ended. Now, from this period up, from this moment onward, we're in level 2 consolidation. Now, this is where, you know, Lewis, you had a bit of difficulty understanding, because level 2 consolidation can go into the level 1 consolidation. So you can have level 2 consolidation going into level 1. But as long as price does not break the highest point of this anchor, so you see where this peak formation is, this is the highest point price reached, right? As long as price does not break this point, this is still a valid consolidation zone, right?
So it can consolidate higher than level 1. But as long as it doesn't break the anchor, it's still valid.
Yeah, so it can go higher than level 1, exactly. So it can come all the way up here. But as long as it doesn't break the peak formation, as long as it doesn't break this anchor, this is still a valid level 2. Does that make sense?
Right. Yeah.
Perfect. Yeah. So now coming out of level 2, what are we looking for? What is the moving average crossover that I said you would usually identify within level 2? Does anyone remember? The 2 moving average crossover.
$50-200.
The 50 to 200, fantastic, right? So we're looking for the 50 to 200 crossover, which actually took place where I circled. And then after this takes place, where's my pen? And it comes outside of this box. When price comes outside of this box, right? We now know that we're in level 3 formation, peak formation, which is down here, right? What are the other confirmations that we're in level 3, guys? What are the other confirmations that you can see right now on this chart that we're at level 3?
EMA fanning.
EMA is finding out. What else?
You got the 50 doesn't cross over, but
The what?
the 50 isn't crossing over with the 800. Is the 50 the light blue one? Oh yeah, there you go.
Yeah.
50
We have
800.
the 5800 crossover, right? So right here, we have the 5800 crossover. What else?
Well, if it was there, you'd be looking at the 200 800 crossover as well.
Yeah, all that, right? So it's either EMA finding out 50 200, 200 800. You know, always one of these conditions will be met. What else are we looking for? There's just one final condition, guys.
RSI spike down the bottom.
Fantastic. We're looking for an RSI extreme, right, within level 3. And we did get an RSI extreme down here, right? Licious price when we got an RSI extreme. What else do we have? What else can you see that we have? We have RSI divergence, right? We can see from this point to this point, we have price moving down. And we can see from those exact same region, we have price moving up. We have RSI divergence, okay? So these are level 3 confirmations, the confirmations that we're within level 3. Guys, does that make sense?
How did you highlight that white box of level 3? How did you know all of it was level 3? Because I wouldn't assume you're in level 3 until you get those crosses and those signals, which would be, so I'd draw the box a lot smaller.
So where would you draw your box up to this point?
I'd start the box where the 50 crosses the 800.
So you start the box where the 50 crosses the 800. Why would you start your level 3 there?
Because
I mean, this is the lowest point. This is the lowest point level 2 reached, right? So from level 2 started all the way up here. And it came all the way down, and then it closed above the 13. So from this point onwards, so from this close up here, we're now within level 3 trap. From this close up here, we're within level 3 trap.
Right.
Does that make sense? So from that close,
no, not really.
trap. Now coming out of level 3, what are we looking for? Coming out of level 3, what are we looking for? So now we know that we're at level 3. Now we know we're at peak formation. What is the next thing we're looking for? Right, we're looking for a shift, right? We're anticipating a shift. Why are we anticipating it? Guys, we need to start thinking like the market makers, right? Because the market makers, they're real people, right? These are people, they don't know our faces, they don't know our names. They take our money, but they don't know our faces. They don't care, right? You know, these are institutions that genuinely go out there to make money, right? The goal at the end of the day is to make money. And they can only make money by taking it from other people. So like that is the reality of the situation. You can either like it, you can hate it. That's entirely up to you. Now, you need to understand this. All of this move down here is costing money, right? All of these move down here is costing money. Who is it costing money to? The market makers. You know, all of this, they're giving away, they're using capital in order to induce traders to go short. Now, once they've induced traders to go short, they need to balance their books. Why? Because there's a lot of short orders up here, right? There's a lot of short orders up here. And if you remember where price came from, right, a few days ago, if you remember this, there's still also a lot of long orders down here. So if you look at this, guys, wait, let me just take this away from play. There's a lot of long orders down here. So if you guys can see this point down, there's a lot of long orders down here. So there are long traders that went long there. There's also traders that went short in this region. The traders that went short in this region, some of them would have been stopped out around here, right? This is around 50 pips away from the peak. Some of them would have been stopped out around this area. Now, the ones that held their position are waiting for price to, of course, come back down, relieve them of their position. And there's some traders that went long here and they've held it all the way up. Some traders went long. Most traders would have gone long in the middle of the trend because a lot of traders are not able to identify the trends before they begin. So they only identify the trend once they see the momentum. And then when they see the momentum, that's when they get in. By that point, they're like halfway, the trend is already halfway through, okay? So what they now need to do is they need to balance the books. And the way to balance the books is to shift price in the opposing direction of where the trending was taking place. So what's happened now is this, guys. So you have now level 3 peak formation. Now you can have a shift outside of level 3, 110%. You will always have a shift outside of level 3. But let me show you how to identify your shift that's taking place. So when you have your level 3 shift, it's important that it takes place. So let me show you something, right? Price opens, so this is the Asian session, right? This is within our level 3 peak. Now this is where price opens, right? This is a peak formation. This is where price opens, price comes all the way down, and price closes around all the way up here. Now the distance from the low to where price closes, so this distance should be around 50 pips. In this instance, it's 45 pips. This distance should be around 50 pips because what they did, they took price and they shifted 50 pips in the opposite direction. So 45 pips in the opposite direction, right? So this is the kind of shift that you're looking for. Once you have price on the same day, it comes down to form the peak and then it shifts on within the same 24 hours, 50 pips. Now you have your shift is taking place. On top of that, what you're looking for is you're looking for price to come outside of the Bollinger Band. Because whenever price comes outside of the Bollinger Band, that's a sign that there's been a lot of momentum. This is a momentum move. So there was a lot of momentum bringing price down here in order to incentivize people to go short. And then it shifted aggressively by 50 pips and it closed the day there. So whoever went short here will be trapped and would have to hold a position up until the next day. That's the first step of the shift. This is the first part about decimation. Now, this is where things now you need to start paying attention to the levels. Now, after the shift is taking place, what are you looking for? You're looking for the 50 and the 13 EMA crossover, right? You're looking for the 50 and the 30 EMA crossover, okay? That's the first thing you're looking for. But I want you guys to understand this. Most of the time, right, in this instance, you only have one. This is called a half Batman. But a lot of the time, you're going to get 2 legs into your peak formation. So sometimes you're going to get price going up to form your peak, right? And then they shift aggressively in the downward direction and they end the day in Asia. Now, what you could have is the next day, they could take price up to around the same level as the previous day, right? And then form another pattern and then shift away. Now, what pattern is this? What pattern is this?
It's just an M, isn't it?
It's an M, right? This is an M. This is called an intra. So write this down. This is because there's different types of M, right? It's called an intraday M, right? It's called an intraday M, ID, right? Intraday M, right? It's called an intraday M. Why? Because it took 2 days for this M to form, or sometimes 3 days, right? You know, you had day 1, the first leg, it came down, and then it went back to the high, and it formed the second leg on day 2. Now, you should always anticipate this, right? In this instance, we had a first leg. We never had a second leg, but we had a first leg, right? Are we still to anticipate a second leg? No, but always anticipate a second leg taking place, right? What's stopping them from taking price all the way up there and bringing it back down to form a second leg? Nothing, before they finally take it away. But now this is where you now need to pay attention to how price is actually moving, right? We have a 13 and 50 EMA crossover. This is the first sign that we could be moving into a level 1. Now, once you know you're moving into level 1, what do? You identify your level 1 consolidation box, which is what we've drawn out here. So you identify the highest point level 1 reached, right? Which is up here. Identify the highest point level 1 reached, and the lowest point level 1 reached, and then you draw a box around it, right? So this is a level 1 high right here. Why? Because it went all the way up and it came down and it closed below the 13. Now, once you have your level 1, right? This is what you should now do. This is what you should anticipate. You should either anticipate a continuation into level 2, right? Or you should anticipate a complete reversal. So, you should anticipate a reset to continue the trend, Now, whenever price is resetting, it will always go at least one level away from the peak, okay? When price is about to reset, it will always move at least one level away from the peak. And then it will form a reset pattern and then move into level 1 level 2, and carry on trending downwards. Guys, does that make sense? So always understand this. When you have level 3, price could move at least, so sometimes it can move 2 levels away from the peak and then reset before continuing. So you wouldn't always get 3 levels away from the peak. You wouldn't always get 3 levels away from the peak. You will sometimes get 2 levels, but you should know that if you're getting 2 levels, that is most likely a reset. And I'm going to tell you guys what are the main conditions you should be looking for a reset. So yesterday, when we looked at this, we said this was level 1. Now from level 1, we're anticipating a stop on low rise. So we're anticipating price to come out of our Asia to stop the traders out. So come out of our Asia, right? And then to rise, right? So we're anticipating this move. Go back into Asia, come out, stop on where we're looking for buys, we're looking for longs. Coming out of level 1, we're looking for longs, right? So what happened was on day 3, we had another long. This is a beautiful long. So this is the trade that I took yesterday. Now coming into today, we know that we're now in level 2, right? We know that we've come out of level 1. We know that we're now in level 2. So what did I do? I drew a level 2 consolidation box. Level 2 consolidation box. Now, within level 2, this is where you need to pay attention, because in level 2, if you guys remember in the workshop, we said that when you're in level 1, especially a level 1 from a peak formation low, you're only looking to trade in one direction. You're only looking to trade up. Now, when you're in level 2, you could trade in both directions. So in level 2, you can trade either up or you could trade down. Okay, so you could trade both directions. It just depends on what pattern presents itself. So today's trade, now this is why I wanted to show you guys the levels today, because this is a perfect example of a reset. How do I know that this trade is a reset? What are the conditions that this is actually a reset? Because today I had price going to level 2 yesterday overnight, right? Price came out of Asia on the high side. So I had to stop on high. And then outside of Asia, it then dropped and shifted aggressively. This was an aggressive shift. How many pips was it from the high to the low? Is at least 1 ADR, right? 45 pips. The ADR for Euro USD is 50 pips, right? So this is 1 ADR from the high to the low. So I know this is a 1 level move. So now what that means is this has to be a reset, meaning that Euro USD is now looking to continue its downwards trend. Okay, now another sign of a reset is this. You're looking also for the moving averages. Now, what are the moving averages that I said a reset would usually take place on or around? What are the 3 different moving averages that a reset would usually take place on or around? Does anyone remember? What are the 3 moving averages that a reset would usually take place on or around?
It's 200 and the 800, isn't it?
So we have a 200, we have the 800, and what else? There's one more.
5,800.
And also the 50, exactly. All right, so the 200, the 800, and the 50. Now, what moving average on the H1 did our reset take place on, or around, anyways? What moving average did our reset take place around?
13 and 15.
13 is not one of the major ones. It was 50, right? This is our 50 moving average here. The price came up. It formed look at this, from the first leg. Because remember this, when we have a reset, we always have a peak formation. So we have first leg outside a band. We had a second leg inside a band. So this is no different from, this is called an intraday M. Why? Because this M took 2 days to form. We had a first leg yesterday coming out of Asia, right? This is the high, and then went into consolidation. And then we had a second leg today coming out of Asia. Okay, so this is our intraday outside the band, inside the band. Do you guys remember these rules? Right? This is our 13 EMA. What did we have? We had a close above, where price came to close below, close above, and came back to close below. This is our confirmed entry. Okay, so it is literally that straightforward, right? So now this for me is a reset. So what am I going to do? I'm going to change my label, because as a trader, you need to always be prepared. right? Because I didn't know this was going to be a reset, not until today. It was today from the shift that took place. I was like, this is now a reset. But where is my interest in trading? My interest is only in trading level 1. This is why this was a profitable trade for me. I don't care about trading level 2s. There's some people that trade level 2s. That's fantastic, okay, right? But I saw this move earlier this afternoon, and I sort of missed it because I wanted to actually take this short because this would have been a long-term trade. If you see this, you can take it. But you need to understand your level 1 trades that I showed you guys yesterday is the safest trades you can place. Because when you're in level 1, you're only looking to trade in one direction. But when you're in level 2, price could go in 2 directions. So now that I know this is a reset, right? What am I now anticipating to take place over the next 2 to 3 days? What are you now anticipating to take place over the next 2 to 3 days?
A fall in price. You've got a 1350 crossover on the right hand side there.
So now we have a level 1, right? So what do we have? We have a level 1, right?
Yeah.
So we have, this is a reset. I'm going to label it for you. So this is our reset here, right? I'll zoom in. We have something called an AFP. So write this down. AFP means away from peak. So we're looking for an away from peak situation. This is our peak. We're looking to trade away from the peak. The reset is now your new anchor. This is your new anchor. And you should always look to trade away from it. Okay? Now, what is our first confirmation that this is a level 1 shift? What is our first confirmation? Huh?
1350 crossover.
Fantastic. 1350 crossover. It's the first confirmation our level 1 is taking place. So now what I can do is I can project. So what is my projection going to be? So this is my projection that for the next 24 hours, 48 hours, whatever. It could happen tomorrow. Tomorrow's Friday. So I'm not going to leave my hopes high because Fridays I usually like to trap, right? So this is my projection. So now this is level 1. This is now coming into level 1 consolidation, right? Now coming to level 1 consolidation. Now, what is our projected move, right? What is our projected move? Now,
trade down away from the peak.
Okay, now coming out of Asia, so let me go back to the 15 minutes. Let me go on the 15 minutes now, because now on the 15 minute, you can see the Asia boxes, right? So based off what I told you guys yesterday, now the conditions trading out of our level 1 consolidation, trading away from the peak. So now we've had a reset that's taking place here, right? We have a sort of an M structure that's taking place. So we have an outside the band, inside the band is crossed a trigger line, and it's also crossed the midpoint as well. These two are very important conditions. But now we have the high. This point is now the high. We're now looking to trade away from this, okay? So what is our projection for tomorrow? What are the conditions we're looking for if we're going to actually have a position on this tomorrow before we can open a position? What are the conditions we're looking for? Do you guys remember the conditions of the decimation trade? What are the conditions we're looking for?
Will there be an
this?
inducement going up from
perfect. So
the Asian accumulation?
Fantastic. So we have Asia is now taking place. So we have price will now consolidate through Asia. Okay. Now from 8 a.m. tomorrow morning, so from London open tomorrow morning, what are we anticipating? We're anticipating inducement. Now, what are the qualities of this inducement? What are the qualities? What would this inducement look like coming out of Asia?
Have a stop hunt high.
Perfect. What is the condition? Because remember this, there are rules. Every aspect of what we're looking for in this chart, the rules. These rules are very important because it allows us to get rid to filter out the trash and only focus on the quality trade. So what are we looking for in this inducement? What are the qualities of it?
So we're probably looking for the RSI to break the Bollinger Bands because it'll be a high momentum move.
Not yet. We're not looking at that yet. We're not looking at RSI. We're looking at the inducement. What are the conditions of the inducement coming out of Asia?
No, don't know then.
A rise in price coming out of it.
Perfect. But how are we going to get a rise in price? What is the first thing that I say you should look for? when you're looking at the rising price, when you're looking at the inducement coming out of Asia.
Is it 3 vector candles?
Fantastic, Lewis. Absolutely correct. So we're looking for either 3 vector candles coming out of Asia, or we're looking for 3 level pushes coming out of Asia, right? So 3 level pushes or 3 vector candles coming out of our Asia range. That's the first thing we're looking for. What's the second thing we're looking for? What's the second thing we're looking for?
The trap activity.
The trapping activity, right? What is the nature of the trapping activity? What does that look like?
Like a M? Or
Like an M, right? So we have the third vector candle. This formed the first leg, right, of our M. And where does it need to close? Where does it need to close? Where does that first leg need to close?
Just below the third V you've drawn there.
Now think about it. What moving average does that first leg need to close?
It needs to close above, below, above.
Below or above the 13, guys? Because now we're looking to go short, right? So does it need to go close below or above the 13?
Below.
It needs to close above the 13.
Oh, sorry. I thought we was already talking about that top bit.
So this is the first leg, right? This is our 13 EMA is somewhere, I don't know, it's right here, right? So our 13 is going to move with price and, it's going to move with all of this. But the point of a vector, what is a vector? A vector is just moving of price. And we're looking at 2 things. We're looking at the momentum over time, right? We need to have massive momentum movement of price over time. This should push price away from the 13 EMA, right? It pushes price away from the 13. So we should have a nice close above the 13, right? What else are we looking for outside after this close is taking place? What's the next thing we're looking for? What's the next thing we're looking for? We have our 3 vector candles. We have our first leg formed, close outside of our 13. What next?
Close below.
Guys, I can't keep reading the chat, so please just unmute yourself and just let me know because I can't keep opening the chat. It messes up my drawing. Wait. So what's the second one? Sorry.
Close below.
Close below, right? We have a close below the 13 EMA, right? That's the second thing we're looking for. What else are we looking for? What's the next one?
Close above.
We're looking for a close above, right? And then what else?
Close below.
And the final close below 13, right? Now, what are we looking for on the TDI? So just imagine this is our TDI. The bands are going to thin out over Asia, right? It's going to thin out over Asia. And then the moment we get this momentum shift, they're going to expand. They're going to widen, right? They're going to widen. That's what's going to happen, right? RSI is going to come through, right? This is our RSI line, right? Now, what are we looking for this RSI to move? Are we looking for it to move whilst this is taking place?
The shark fin.
Exactly. So the first leg, we're looking for the RSI to come outside of the Bollinger, outside of our bands, TDI bands, right? Outside of the TDI bands. And then what else after that? Come back in to form a shark fin, right? And then what about the second leg? Where should RSI be in relation to the second leg?
Inside the Bollinger Band.
Inside the Bollinger Band, right? So we have a second leg inside the band. So we have a first leg outside, we have a second leg inside the band. Fantastic. And then we're looking for this to now cross our signal line. So you see this red line, that's a signal line, right? So now waiting for RSI to now cross the signal line and also to cross midpoint as well. Once we get both crosses, this is now a solid confirmation. Solid confirmation to go short, okay? Now what we're anticipating is this, once we have this is a crisp, clear picture that we're ready to go short. So we get a final close below the 13. You can either execute your trade straight away, or you can wait for the zone retest, like I showed you guys yesterday, right? 50% of this shift candle, or you can 38% or 61.8%, or you can do 3 different orders on those 3 levels. And then once you get that done, once you get that shift, now you should be anticipating a level 2 fall in price, right? A level 2 fall in price.
At what point will you go? Sorry. At what point will you decide whether or not it's going to retest the 38, 50, 61
I don't know.
level?
You don't know. You could get a close.
Okay.
Below, you can get a close below the 13 on price, just goes straight away. It doesn't retest. It just falls, right? Yeah. So I don't know. You don't know. Nobody knows. We prepare for it. You can open a a percentage off of your order year, an instant execution. Then you can set a pending order at your 50% level and set a pending order. You call that.
Okay.
So you have a foot soldier year, and then you set your main order year, right? So we just prepare for these eventualities. Okay. So guys, does this picture make sense to you, or does anyone have any question in relation? This is a cycle, guys. This is a picture, right? This is our anchor point, comes down, first leg, right, into our second trap, right? And then we get that price goes down into level 2. And then outside of level 2, again, we're expecting a consolidation, and then the same thing into level 3. Now, this may not happen tomorrow. We may not get the full move tomorrow. We may get, 1 second, let me just delete all of this. So we may get something like this. When we get price going through Asia, right? It comes up to induce more lot traders, because traders, they want people to be net long. Okay, they want to have a book where people are net long. And they remember this, guys. They don't have to move price tomorrow. They can hold price in level 1 for 2 days, for 3 days, for even a week if they want, right? They don't have to move price straight away. They need to have a book. So right now, there's people that are long there, that are holding their position and hoping price is going to come back and relieve them of their position. But they need, and also there are people that are net short, right? Because when this took place, a lot of people were selling. So what they want is they want their books to be imbalanced. They want an imbalance. They want to have more people going long than short. And they're going to keep inducing until they get that. They could even take price all the way up there to retest this level, right? They could take price all the way up to retest this level before they finally shift again. And then they give you a level 1 trade, okay? But they're going to remember this, guys, always try to think like they're thinking. Because before, price doesn't just move on its own will, right? Has to move with intention, right? This move has its purpose. The purpose is to gather contracts. This move has gathered contracts. But the question is, do they have enough contracts that they need? If they don't have enough that they need, if they don't have enough people that have gone long in this situation, and they don't have the people that have taken those short positions to take them out in the morning, what they're going to do, they're going to induce. But now, this is 2 scenarios that could also take place, right? You could have a scenario where price goes through Asia, right? And it comes out of London and you just get a straightaway trade. So you don't actually get a stop on outside of Asia. You just get price just goes straight into level 2. It's called a straightaway trade. Now we're going to teach you how to identify a straightaway, but right now don't try to chase this trade. This is also a type of setup. This is a type of setup, but right now don't try to chase it. The only type of setup at this stage you should be looking for is the setup that takes place outside of Asia. That's the only setup you should be looking for. There's also another third possibility where price could come down and then we get a retest here and then it just goes off in the midpoint of Asia, right? This is another type of setup, right? This is also another setup we look for, right? But again, you shouldn't be trying to find, like, we're going to teach you all this over time, but you need to first of all understand one thing before you try to understand another thing. If you try to understand everything at the same time, you're going to get confused and it's just not going to happen. So the first setup that you should try to learn is the setup that takes place outside of Asia. This is the best setup to actually trade. Okay, it's the best setup to trade. So, but you should always be ready as a trader. You know your possibilities. You know that they could take you back up there, right? But here's the thing, guys. How are you going to prevent yourself from getting trapped if they were to take price up there? How would you prevent yourself from getting trapped in this move? What? So does anyone know the answer? How would you prevent yourself from getting trapped, from taking the price up to the top?
You could put your stop loss more than 1 ADR away.
You could do that.
That'd be really far.
Yeah, you could do that. But here's the thing, guys. You shouldn't be in the market anyways. Because here's the thing. You only enter the market when you have your confirmed M. So we're not trying to chase price. We're not trying to guess the highest point price reaches before. We're not trying to do that, right? We wait for the confirmed M to take place. Once we have the confirmed M take place, then we enter. If we enter after the confirmed M, our stop loss goes there. If they decide to come and take the level a little bit higher, we get taken out exactly at this point. Stop loss is going to be very small. We're going to lose very little money. That's how you prevent yourself from getting trapped in this. Because we're not here to get trapped in the traps, right? There's a reason why we're set apart from a lot of traders. We don't get trapped in the traps, right? We move with the big moves. We move with this. We move with the market makers, right? We wait for them to show their hands, And then once they show us their hands, we move with them. That's how we trade, right? We're not in the business of trying to guess. We're not in the business of trying to predict. I'm not here trying to predict what's going to happen. I don't know what's going to happen tomorrow. I don't even know if we're going to get a trade tomorrow. We have price going all the way through consolidation tomorrow, right? That's a possibility, right? But as a trader, I'm prepared for every eventuality. If they decide they're going to take price all the way up there, guess what? I'm prepared for that. I want to take my trade up there. I'm going to be looking for a trade up there. If they decide that they're going to come out of Asia and give us a stop up, I'm prepared for that. I take my trade there. Right? If they decide that they're going to not actually come out of Asia, but they're going to give us a straight away, guess what? I know the confirmations from that. I'm prepared to take my trade there. So this is where, as a trader, you're going to grow over time. And this is where experience comes in. Because the more you practice this stuff, the more you apply this stuff, and the more you learn different variations of the theme, right? The more prepared you're going to be as a trader. And that's pretty much what trading is all about. It's all about being prepared. It's all about being prepared for different eventualities. All right, let's look at something else. Does anyone have
Sorry, just quickly. When you identified that peak formation high there, why did you class it as an M? Like, I look at it as 3 high peaks, like 1 peak,
Okay.
2 peak, 3 peak,
Fantastic.
rather than an M.
All right, so that's a great question. So here's the thing, right? Not every M is going to be beautiful. Not every anchor is going to be amazing. Not every peak formation is going to be crispy clear. Sometimes you're going to get messes like this, right? Sometimes you're going to get really ugly three-legged M's. And sometimes you're going to get really ugly three-legged W's, right? So it comes in different shapes and sizes. You're going to recognize over time. But for me, what I'm looking at is a TDI. I'm looking at this, right? I'm looking at this, and I'm looking at this. Now, this came from here, right? And it gave me this is called a free level rise. It gave me a free level rise to the high, right? Free level rise to the high, and then it dropped. Okay. There's also a type of move, and there's also a type of M if you actually look at this as well. If you remember I talked about something called an advanced M. I'm not going to go for an advanced M now, but this is an advanced M. So this is an M, it's an advanced
So you're just confirming your free level high by the fact that the TDI is up in the bands.
Yes, so I'm looking at my TDI, because if you look at the level that this is in as well, right? This is also sitting at 63%. It's not like super, super high. But what I'm looking at, 1 second, let me just tell you this. So what I'm looking at is, if you go on the 1 hour, you're going to see this a lot clearly. I'm looking for that intraday M, right? Especially on the reset and especially around peak formations. You're looking at this. This is an intraday. You can see this, outside the band and inside the band, first leg.
Right, yeah. It's a lot clearer. Bigger time scale.
That's why looking at different time frames is very important. The higher the time frame, the better.
Yeah.
All right.
Okay, awesome. Thank you.
Any other questions? Cool. All right, let's look at pound Aussie. It's another. Did anyone see this trade today? Did anyone catch it or see it? As I showed it to you guys yesterday. No one? Oh, that's a damn shame. It's like a free trade. All right. Now these are the levels on pound Aussie dollar. Okay. So let me just plot the levels with you guys. So on the H1, right? This is our level 3 peak. So where this box is. So as you can see, we had a lot of activity down here. Then we had a massive inducement to the upside. So this induced a lot of traders to go long. So we know that there's a lot of volume, right? A lot of orders, contracts, people, traders going long. So of course we know a shift is eventual after we have 3 levels. So we did have 3 levels of rise. This is our peak formation right here. Now, what are the qualities of this being a peak formation? Very simple. We had a widening of the EMAs, right? We had price at an extreme level on my RSI, at my extreme level on my TDI. So price is literally sitting around 79%, 80%, right? That's another confirmation. TDI divergence, right? We had, price literally looking like it's going down, but on the chart, on the candlestick, is looking like it's just moving in a straight line. So this is another divergence. That all divergence means is, if this is going down and this is going up, that's divergence. If this is going down and this is going straight, that's divergence. If this is going straight and this is going up, that's divergence, right? So divergence just means two things are not moving in the same direction. So we have RSI divergence here. What else? You know, we also have, you know, a crossover right here, but that came much later on. So I'm going to ignore that one. Right, so those are the main confirmation that we're in level 3. We're in peak formation up here. Now, coming out of peak formation, what are we looking for? We're looking for a shift, right? So what we got on the day, so if we go to, if I just zoom in so you guys can see this clearly. So what we got was this, right? So, you know, obviously we had our M structure there. I don't know if you guys can see this. We had leg 1, that's the first leg, and that's the second leg. And then it came down and closed and gave us a third leg later on. So this is second leg, came down close below the 13, then just gave us a third leg just for fun. Because this is called a money grab, right? They just wanted to grab more contracts. And then finally closed down below the 13. Now, once you have your final close below the 13, of course, you're looking for level 1. So this is actually level 1. So the initial shift, understand this. So write this down. The initial shift away from the peak is level 1. Write that down. The initial shift away from level 1, from the peak is level 1. So we got this initial shift right there. So this happened within the same 24 hours. They brought price down, they took it up, they took it down. They probably didn't have enough contracts. They didn't have enough people that bid. So they took it back up. And when enough people bid, then they took it back down and went into Asia. Okay. Now there must have been a lot of look how deadly these weeks are. Right? There must have been a lot of contracts gathered up there. So once you have that initial shift, you know you're level 1. Then the next day we're level 1 consolidation. Now coming out of level 1 consolidation, we know that we're only looking to trade down, right? We're looking for shorts, okay? So coming out of Asia, we're looking for either stop on outside the box. This is the trade you guys only should be looking for, or we're looking for stop on inside the box. So there's 3 different variations we look for, but we're looking for a trade short. So the next day we got it. We got the short move right here. So this is our level 2. Okay, this is the lowest point level 2 reached. Came up, consolidated up onto this point, up onto the 50 EMA, up onto here. We also had a 13 and 50 crossover at the end of level 1 consolidation. So it didn't take place within level 1, but at the end of level 1 consolidation, we had a 1350 crossover. Okay, so this is now our level 2 consolidation all the way up here. Now, next day, we had the shift coming out of level 2. Price came up. This is called a static bounce, don't worry about that, but this is also a type of trade. It came out of Asia to induce people to go short, came back up to take out their stops, and then it actually moved down. This is one of the reasons why having a strong directional bias and a clear directional bias is important. Because when you have a strong and a clear directional bias, right, you know, you're always prepared and you just become more confident in your trades. Like, you know, they took out the induced short. So you, as someone that is very versed in the ways of market making, right? You know what the market makers do. You know the purpose. You know why they move price the way they do. You would have seen this as an inducement coming out of Asia. And then when you see them move back, don't get scared. Don't think, oh shit, they're taking price back up. No, it's an inducement out of Asia. And then it carried on the move in the afternoon when New York opened. This is New York, right? This is now level 3. So level 1, level 2, and level 3, right? So level 3.
Just quickly.
Go for it.
On the level 2, you didn't get the 50 and 200 cross until like quite late. Like
exactly. So until later on, right? You know, like I said, you wouldn't always get your move. Like, you know, this moving average cross came later on, right? There's 3 things that I said. There's 3 contexts on day 1. What are the 3 contexts I said? The pattern, right?
Yeah.
Position.
And
timing. But out of all these 3, the pattern takes priority. Pattern is priority. Positioning of moving averages is important. Pattern is priority. This is interpreted within the context of the pattern. You're not interpreting moving averages within, pattern within the context of the moving average. You're interpreting the moving average within the context of the pattern. It's all about the pattern. The pattern, the pattern, the pattern.
Oh, okay.
Then the position.
There's a hierarchy.
Yeah, so there's a hierarchy. Okay, so we had a pattern, right? We had a pattern. We had a shift. The shift is level 1. We had a consolidation. We had another shift. This is a decimation, right? Level 2, right? And then we had a pullback. And then we had another shift coming to day 3. This is level 3, okay? So now we had a level 3. After level 3, we had an extra level. This is level 4. Now, what did I say level 4 is? Level 4 is simply an extended level 3. So I don't like to say level 4. I just like to call it level 3.1. I think that's a better way to call it, right? Level 3.1. Because if I say level 1, it confuses people. So this is level 3.1. I'll call it that from now on. Now, the extended level is usually a peak formation. This is a peak, right? It's a peak, right? How do I know that we're in an extended level 3? What are the rules of a peak? Look, if they extended the level, what's that going to mean for RSI? RSI is going to be really dropping it like a bomb, right? RSI is going to be in an oversold region, which is where it is right now, right? Right now, below 29%. We're in level 3, right? What else is the confirmation of a level 3? You know, we have the flattening out of the moving averages. What are the other confirmation we're level 3? We have a 5200 crossover right there. Does that make sense, guys? So all of these are level 3 confirmations. Now, in level 3, what are we looking for? Again, we're looking for a peak formation. So this is our peak formation. So remember this, guys. Peak formation, you can sometimes get one leg, but sometimes you get 2 legs. Most of the time, you were going to get 2 legs. So you had your first initial leg, your first initial drop. And this legs is going to take place within 2 or more days. So it's called an intraday W. Okay, so you have your first leg. It goes up. This is day 2. You guys can see the Asia box back into Asia. And then what do they do the next day? They form the second leg. So this initial shift and they form the second leg, right? And they shifted away really fast from that second leg. Okay, and then went into Asia for the next day. So this shift back into Asia is level 1. Does that make sense, guys? Okay, that shift back into Asia is level 1. Now, when we're in level 1 consolidation, what are we looking for? Right? Coming out of level 1 consolidation, we're looking to go long. We're looking for buys. Why? Because our peak formation low is down here. We have a new anchor down here, and you trade away from it. You always trade away from the peak. So what happened was this, right? Let me just zoom in so you guys can see this a lot closer. This is another example of what I mean by you wouldn't always get your trades on the day that you want it, but you just have to be patient and you got to keep trying and you just got to show up every single day, right? I know you guys work, so don't let that scare you. All right, so clear this. So now you have your level 1. What is the confirmation we're officially within level 1? Well, we have a 13. In this situation, we have a 1350 crossover within level 1. Fantastic, right? That's what we're looking for. Then we're going to Asia. Now here's the thing. On day 1, so this is day 1, right? This is day 1. Either price induced traders to go long, and then they shifted to form. So remember, you're always looking for this. You're looking for this trap. So the trap there, the trap there, the trap both sides, right? So they grab the pending orders for breakout traders. They shifted price the opposite direction, right? And then what happened was this. You would have had, so if you actually look on the 15 minutes time frame, this is a W. Actually, I'm going to go to the 15 minutes time frame. Right? This is why we trade on the 15 minutes, because you see the patterns more clearly on the 15 minutes. So you analyze in the 1 hour, you trade on the 15. Anyways, so they shifted out of Asia. So here is it. So they grabbed above Asia, they trap both sides. So the trap there, the trap here, right? But now what are we looking at coming out of Asia? We're looking for either a free level move or we're looking for free vectors, okay? Coming out of Asia. So this is our Asia range. And another thing as well, because I know Lewis missed this. So when you have an Asian range, right, you need to, this is where common sense would sometimes come in. Let's imagine that you have price range. This is an Asia box, for example, okay? Now you have price ranging in this region, and then it shifts up in the middle of Asia and starts ranging, and it goes into London. Guess what? This is your new Asian range. So the range is not the whole box. This is your new Asian range. Okay, so you wouldn't use the whole box as A. So yes, the whole box is going to be colored because the box indicates the lowest points and the highest points that price reached in Asia. That's what the box does. It just highlights the lowest points and the price and the highest points the price reached within Asia. So sometimes you can get the box actually highlighting the full consolidation in Asia, which is fine. And you usually get like 12 pips or 10 pips or something like that. But when you have like a 40 pips range, you need to use common sense, or a 56 pips range. You need to use common sense. You need to zone in and be like, okay, cool. Our range started off here, it went here, and then it went here, and then it shifted to the upside. So this is now my new range. So I'm looking for a 3-level shift coming out of this area. What do I get? I get 1 vector. I get 2 vector. So this is not a confirmation. I need either 3 vectors or a 3-level shift, but I only have 2 vectors. So what happens is this. Price comes back up, closes above my 13, closes below my 13, closes above my 13. Is this a confirmed trade? Guys, is this a confirmed trade? Is this a confirmed trade? What do you guys think? You guys there? Is this a confirmed trade?
Yes.
Confirmed W, but I don't know about a trade.
It's not a confirmed trade. Why is it not confirmed? Because the first condition is not met. We didn't get 3 vectors, we didn't get 3 pushes. We got 2 vectors, not 3. This is why this is how rigid and this is how disciplined you need to be with these rules. Like, we can teach you the strategy, we can teach you the confirmation, we can teach you the setups, but what we cannot teach you is discipline. And discipline is very important as a trader, right? We didn't get a 3 vector shift outside of this range. We got 2 vectors. Like, you know, this is just about 1. I wouldn't even count it, just got 1 massive shift, right? Just 1 vector, right? This is not sufficient.
So,
it's not enough.
Are vectors just large candles? Because there's 3 candles there. But
so vectors are large candles, right? You know, is momentum in price over time. So we're looking for a big push, right? Not like
right,
one large candle, like this large is a vector candle, yes, but just 1 candle, right? So what I'm looking for 3 vectors coming out of this Asia. So this is the London session. This is now London session, right? We have just 1 big vector candle. We do have a W. We do have an outsider band, right? And we do have an insider band, but we do not have a setup. This is where you need to understand. We don't have a setup. You could have gone long there, but what's the point, right? This is not a setup. And you would have actually been proved wrong in New York, because now when New York opened, what happened? Price reversed. Now this in New York is actually when we got a little bit of the setup. We got 3 vectors coming out, right? 3 vectors, so vector 1, vector 2, vector 3, coming out of the Asia range, right? This is the Asia range, right? We didn't get the close above, close below. We didn't get outside the band, inside the band. So did we have a setup on this day? No, we didn't. So on this day, you shouldn't have placed any trade. Like, yes, on this day, you should have been looking for an opportunity to go long. You should have been looking for an opportunity to go long. You should have been looking for the confirmation. But what takes priority over everything else? The pattern. If you don't see the pattern, you don't trade. Right?
So is this just an example of like them gathering orders, just picking up?
Exactly. So all of this is just gathering contracts, literally. Right? The money grab there, money grab there, money grab there, money grab there. People are so confused, buying, selling. Like, where's price going? Is it going up? Is it going down? Right? So they're just gathering contracts right now. Right? So going to the next day, right? Which was today, right? Today was a beautiful day.
Jeez.
And then, you know, we had price going to Asia, came out up there. Right now we had a 56 pip Asia range. That's wide, right? What are we looking for is like a 20, remember guys, there's a 20, 25 pip Asia range is like the maximum we should be looking. So what should we be looking for? 20, 25 pip. But in this situation, we have a 56 pips. We need to think smarter than the blue box. We need to apply common sense. So as you guys can see, we had a shift and the range shifted up here. This is now my new Asia range. Okay, so now what am I looking for? I'm looking for a 3-level shift or 3 vector candles coming outside of this range. So what do I get? Very simple. I get a shift 1, 2 vectors, but shift 1, right? I get a close above. I get a close below. I get a close above. Do I have a setup in this situation? I have an outsider band. I have an outsider band. Do I have a setup? What do you think, guys? Do I have a setup? So this was in the morning, right? This was in the morning. Do I have a setup? Yes or no?
Well, after the initial W, no, you haven't got 3 vectors.
Exactly. I don't have a setup, right? I don't have a setup. I only have like one sort of vector, 1.5, I'd say, or half a vector and a 1, right? But I don't have 3 big pushes outside of my Asia. Yes, I get my outside band. Also, I have 1 leg outside, 2 legs outside of my Bollinger Bands. I don't have a setup. No. Okay. But what happens in New York? Because remember, there are 2 times that you can look for trades. The first is coming out of London. The second is coming out of New York. So you can choose to trade both times, but I'll say at the beginning, you choose to only look for opportunities in one. So you can either look for opportunities in London or New York. Like today, I missed the Euro trade. Like the reason I missed my Euro trade is because it happened in London, and I mainly trade New York. I'm looking at charts from 10 a.m., opportunities from 10 a.m. And that happened at like 8, 9 a.m. in the morning. So you don't always have to trade from London to New York, like especially if you're working, right? You're working, you guys are working. You can trade both, but pick one. Either trade London or you trade New York, okay? So in London, we didn't have an opportunity to go long on pound Aussie dollar. But what happened in New York? So New York started around here. We had 3 vector candles, 1, 2, 3 outside of Asia. We had acceleration outside of a Bollinger Band, so we had to close below. Perfect. Condition 1 met. Condition 1 met. Then we had to close above the 13. We had to close below the 13. 1 leg outside a band, another leg inside a band. And then we had a final close above the 13. So would you have entered here? No, because this is not above the 13. Why would you enter there? That's below the 13, right? So price came. That's very important. This is why there's a reason why we have these rules, right? There's a big reason. So you don't trade shit. Because if you entered here, right, you would have been scared because price would have dipped all the way back to the low. If you placed your stop loss there, you would have been stopped out. But if you actually waited for you to have a clean close above the 13, then you take your trade, then that's your profit.
Sorry, Walter, would I be all right to say that if you look at the RSI, when it crosses over your central signal line, is that when you wanting to come in there? Literally
so on the TDI confirmation, right, this is what you're looking for. This may happen after the entry, right? But once you're in the trade, this is what you're looking for. You're looking for your RSI to cross the baseline. So the yellow line is the baseline. RSI should cross the signal line, which is the red line, and should also cross the baseline. Okay, so once you have RSI crisscross your signal line, so you have price crossing the signal line twice, you should have a final cross above the signal line and also a cross above the baseline. If you can get that and add that into your list of confirmations, fantastic. Because this is another filter so you don't trade shit. Because now let's imagine you see your full W, but your baseline is somewhere up here, right? So your baseline is somewhere up here, your RSI is down here, and they're not crossing, they're just moving a line. Then the price is probably going to plummet to come back down and you will lose money, right? So if you actually wait for this crossover to take place, that's another signal so you don't trade shit. And then you actually trade big moves, good moves. Does that make sense?
Excellent, thank you.
No worries. So today we've had level 2 take place. What is our confirmation level 2 is taking place? We have a 50 and we have a 200 crossing over right here. Beautiful crossover. Prices come outside of our level 1 consolidation, all right? It's come outside of level 1 consolidation. So now we're in level 2 zone. This is level 2. Now, what can happen in level 2? This is an interesting question, actually.
Consolidation.
I mean, after the consolidation, what can
trade both ways?
You can trade both ways, right? Now, why is it possible to trade both ways? What are the 2 possibilities that can take place? Or the 2 big, within the 2 big possibilities, there are more possibilities. What are the 2 big possibilities that can take place?
You got an RSI extreme.
Like, here's what could happen, right? So let me just go back to each one.
Could go to a reset or...
Exactly, you could have a reset, right? You could have, so this is a downtrend, right? This is a decimation. So this is where the market makers are balancing their books because a lot of money that they've given away. Now they're just hitting the stops. They're going up the levels, hitting the stops. And just notice how price is moving from trap area to trap area. This is really, really cool stuff. So this is a trap zone. See this? It's a trap zone where the massive wicks are. But notice how price is really moving from trap area to trap area. So a lot of trap volume there. They came up, they really pushed and pushed and pushed. right? So people are probably going short in this area, seeing this big fat with bearish candles. They're thinking, you know, what, price is going down. So they're seeing these big fat bearish candles. Like, look at that. Look at these big fat bearish candles. This is how, like, if you're on the wrong side, like, you know, you don't want to be on the wrong side. I was on the wrong side at some point when I started trading. And I know a lot of people that are still on the wrong side. You don't want to be on the wrong side of this, because all of this is like, is hidden a lot of technical confirmations. And you're seeing big bearish candles like this, and you're thinking, you know what, price possibly is going down. And then what did they do last minute? Destroyed you. So if you entered shorts around this region, you're completely destroyed. Stops have been taken out, right? And guess what? Where's price now? Price is, look at this, is another trap area. That's where price is. So they're moving from a trap to a trap, just moving from level to level. It's pretty, like, you know, it's just so good when you see it clearly. And then coming out of level 2, what are you anticipating? So you're anticipating a reset. So you could either have this, right? So price comes down, goes into Asia, gives you a second leg, and continues going downwards, right? You could have that. So this is why we say we can trade both ways. So you can have that. So the confirmation of that would be coming out of Asia, you're going to see a stop onto the high side, right? That's your confirmation for that. And then you see an M forming around where these wicks are. So you see an M forming there. Okay. This, I really think this is a very high possibility, because this is a zone flip, right? The zone is flipping, they're just going to flip it on its head, right? So I think this is a very high possibility of taking place, but I'm not going to go into that. And then the second possibility is, let's clear this. You know, they're coming out of Asia, right? They throw you 3 vectors, 3 pushes to the low, gives you a first leg, gives you a second leg, and then they take price into level 3, right? Level 3 rise. It's level 3. So what do? We anticipate, right? We don't predict, we anticipate. So I can only know where price is going to move in the morning when they show me their hands. So I'm not going to just wake up in the morning and just press buy, right? You know, I'm going to wait for them to show me, because it's all about entries. It's because you don't want to get in the middle of the trend. You don't want to buy there. That's a shit place to buy. Because what can happen now, you have a few pips and you're holding overnight, and they could just take you out in Asia or take you out in the morning. You don't want to buy there. You want to buy down here. Get out at the end of the day, close your order there, you're done. Like, that's how to trade. You know, you don't want to be looking at this and thinking, oh, you know, it's bearish on now, I'm going to buy it. It's too late. You've already missed the move. That's why today someone asked me in the Signal group, you know, are there, you know, there's a news coming up, you know, you're going to trade, place any trades. Like, dude, like, I missed I saw the bullish opportunity on Euro, but I missed the entry, right? If I missed the damn entry, I'm not going to trade, right? You see, like, this move, you know, came out this morning outside of Asia. Right, this would be my trade. This is what I was looking for from yesterday, right? But I missed the damn move, because I don't trade in the morning. I don't trade London, right? You know, so I'm not going to kill myself over, right? I'm not going to go try to chase the move. I wake up later on and I see this is taking place, and I'm like, oh, I'm going to get in here because, you know, it's a nice place to get in. Like, what if they could do this and come back on me? I don't want to do that. I want to get it where I know that I'm going to at least get, you know, a nice 30-pip move, and then just get out there, done, right? You know, so sometimes you got to see it on your hands. And then what happened? They took it later on in New York, and then they reversed it. Boom. That's your reversal. I could have taken this trade. I could have taken, because I saw this taking place. You know, nice trap through yesterday's high. You know, nice M formation on the 15 minutes as well. It's just, it was a nice trade. But yeah, I prefer to trade level 1. So I just prefer waiting for the level 1 to take place, consolidation. That's my trade. This is what I look for. Like, I don't try to get the peak formations. You can do that if you want later on, once you master these moves, right? You know, you can become whatever trader you want to be. You know, personally, I just prefer the moves outside of level 1, away from peak trades, because those are much more safer trades to place, right? All right, let's look at one more pair, and then we're going to call it a night. Let's look at, what's the other one I was looking at? All right, EuroCAD. I looked at EuroCAD. Yes. This is another one. This is another one. Right. This is another one. Okay. So EuroCAD. Now, again, you go on H1, you identify your levels, coming from the peak formation. So you find the most recent peak formation low or the most recent anchor point. So obviously you go to the left. You always look to the left, right? So looking to the left, right? Looking to the left, this is what you're going to see. You're going to see this, right? This is your anchor, right here. You have your price coming outside the Bollinger Band. This is an extreme low, right? This is your anchor point. And on the same day, what did they do? They brought price and they shifted at least 50 pips. So if I calculate the move from the low, if I calculate this move from the low to the high, I guarantee it's around 50. There you go, 6 to 8 pips, right? So the shifted price 6 to 8 pips away, right? At least 50 pips away. So this is more than what we need. And then go into Asia, right? Once you get this move on the same day, you know that they formed the peak. This is your peak formation though. You know that the next couple of days, you're looking now for two things. You're looking for them to come back, retest on the second leg. So you're forming an intra-day W, right? Or you're just looking for them to go up and close above, looking for the 1350 crossover. You're looking for that level 1 shift and take it from there. So that's what you're looking for. So we have that, we have the close. And what do? They then chop around. They chop around before eventually coming back to form the second leg there. So how many days did that take? It took 1, 2, 3, 4, 5. It took 5 days for them to give you a second leg, right? That's how patient you gotta be sometimes, right? You could be looking for trading opportunities, but there's no opportunity. Why is there no trade? Because I don't have a 1350. That's the first thing I look for coming outside the peak. If you guys remember, right? The first thing you look for coming outside the peak is a 1350 crossover. At any point, did we get a 1350 crossover in this area? No, we didn't. Not until we got to here. Right? We didn't get a 1350 crossover at any point until we got to day 1, day 2, day 3, day 4. So there is no trade. Price came out of the peak. Fantastic. So we're waiting for that crossover. We're waiting for the second leg. So you got to sit down and wait. So there was no trade from this peak, okay? Now, moving forward. So finally, we get a crossover here. So we get a 13 and we get a 50 crossover here. Now, we could have said this is the first leg and they come down and of course they threw us a second leg down here, right? Second leg down here, which we would actually not be wrong, right? This would be a first leg, this would be a second leg. And then coming out of this, so this is us just doing this in real time. So let's imagine that none of this stuff exists, right? So we're just doing this and we're going along with price. And let's imagine after this crossover, we had now this big shift, right? This is a decimation. So now this is taking out the stops of people that went, that went short. So it's taking out the stops, okay? And inducing traders also to go long. Now, once you have this taking place, what's gonna happen is this. You're gonna look at this, but on the same day, here's what happened. On the same day, so this is our Asian box, right? This is a second day Asian box. So they took it away, and on the same day, they took it back down. And then they went into Asia. For me, this is not good enough. This is absolutely not good enough. Because what is the pattern? The pattern is this. If you want a level 1 confirmation, yes, you want your 1350 crossover, but you want to close away from the peak, as like you want this close. So you have the peak formation and you want to close away from the peak into consolidation, away from the peak, at least 50 pips, right? Close away from the peak, 50 pips gap from the low to the high, right? But what happened is on the same day, they took it up and they brought it literally back down and they closed price around where they opened that day. This is not good enough, okay? This is absolutely not good enough. So I know this is not level 1. This is definitely not level 1. So the next day, what happens is this. So am I looking for a level 1 trade? Am I looking for the trade for the decimation trade, guys? No, because this is not level 1, right? So the next day outside of Asia, they then brought down and they gave me a second leg, a proper second leg spike, proper second leg, right? Now, this is what I'm talking about, right? This is a money grab move. They really grabbed it. They induced traders to go short. So traders that went short here, they went short there. They're inducing traders to go short. And on the same day, they shifted and closed in Asia away from the peak. This is the solid shift. Look at this, right? This is the shift right here. This is the shift. They shifted and then closed away from Asia right there. This move alone should be more than 50 pips. So if I take it from the low to the high, 75 pips. No, this is the high, 68 pips, right? So this is a valid shift. This is a valid shift, okay? You know, once you get your shift and you go into Asia, you know that you've got, and you have your 1350 crossover, you have your peak, you know, from your peak coming out of the bands into extreme zone, you know that you have your peak formation low, right? Done, peak formation low. This is your ankle. Now we're looking to trade away from it. We're looking to trade away from it. So what are we looking for the next day? So we're looking for this. So the next day we're looking for price. So let me just delete all of this for now. So just delete this, just delete. I don't care, just delete. This is why I prefer MT4, no trading view. All right, so now we're looking at away from peak trade. So we're looking for price coming out of our Asia, forming a trap, closing above the 13, TDI sharp fin out, sharp fin in. That's what we're looking for, okay? So if we go on the 15 minutes, we're gonna see this in more detail, but it did happen. We did get that away from peak trade. You got your signature trade, right? So they induced out of Asia to grab the contract and they brought it back down and it gave us the move. So this is, so on the 15 minutes, this is a W, 100%. So this is a railway track. If you guys remember the railway track formation we mentioned in the workshop, right? This is a railway track. So on a railway track on the 1 hour is a W on the 15 minutes, right? Write that down. So if you have a railway track on the 1 hour, that's most likely going to be a W, or it's going to be an M on the 15 minutes. If you have a railway track on the 15 minutes, that's most likely going to be a W or an M on the 5 minutes, right? So you have a railway track there, which is most likely a W on the 15 minutes, right? And then we have our move. So this is a trade. So this is now level 2. Okay, so let me draw the boxes. So this is a peak formation low. Right there. And then we have level 1 consolidation, right? So this is the highest points that level 1 reached. Coming out of that, this is the lowest point. So this is a level 1 consolidation, right?
Walter, can I ask you a quick question?
Yeah, go for it.
I thought for confirmation you need like a 3 vector candles and then the sharp fin to confirm for entry, right? But then I only see like 2 candles.
Okay, so remember what I said, right? This is the 1 hour chart. So we're looking, when we're actually trading and looking for an entry, we go down to the 15 minutes, right? So if I go on the 15 minutes, I'm going to show you, you're actually going to hit these conditions. So I'm going to go back to where we were. If I can find it. Just zoom out. There you are. Okay, so go on the 15 minutes, you're going to see that you're going to get an entry condition. So what did I say? A railway track on the 1 hour is a W on the 15 minutes, right? So there you go. That's a W right there, right?
Okay.
So now we're going to see this actually hits all the conditions. So we're either looking, so this is Asia, right? So coming out of Asia, we're looking for a free vector candle, or we're looking for a free level shift. So we have vector 1, vector 2, vector 3. So we have 3 vectors coming out of Asia. At the same time, we have price coming out of our band on the TDI band. This is the low of the day. Price comes up, it closes above the 13, right? Actually, yeah, this is an advanced W. It's an advanced, but I wouldn't, this is not a W out trade. I wouldn't trade this. I wouldn't trade this. Yeah, this is called a, I'm going to show you this to you guys later on. This is not an advanced W, sorry. This is called a half a back. So you know, like Batman, right? So if you guys, you know, the Batman hat, right? This is actually legit, like a setup. So this is the Batman hat, right? You know, this isn't half a bat. So this isn't half a Batman hat right there. Then it just goes, boom. So this has sometimes, so this is another variation that we look for as well. It's half a bat, but I don't trade half a bats. I don't care about them. You know, Brian does. So Brian can actually show you guys the half a bat move later on. So this is half a bat down here, and then it just takes it away. So yeah, but this is not, definitely this is not a W, right? So you guys might be looking at this and thinking, yeah, but this is like, you know, I got the first leg there, it came up, gave me a second leg, gave me the close, like this is not a W. So there's no trade on this day actually. There's no trade on this day. So the setup is there, you know, with the AFP trade is there, you know, price shifts aggressively away from the peak. But on this particular day, on this specific day, is there a trade? No, there isn't a trade. So you don't trade. So yes, we have the level 1 trade, but we don't trade it. Okay, you don't take it. And then into the next day. So what price does is shifts outside of this, outside of level 1, and it goes into Asia, right? And this is now level 2, right? So now thinking when level 2 is level 1 confirmation, level 1 consolidation is done. This is now level 2, moving into level 2, right? So we draw a box from the highest point to the lowest point, and this is level 2 consolidation. There you go. Okay. I don't know why that's not allowing to. MT4 is so jarring. All right, so now we have MT4, level 2 consolidation. Now what we're looking for is price to come out of level 2 into level 3, which it did. This formed that peak formation high right there. Just close, man. Don't want to mistakenly just press trade. All right, so this formed the peak formation high there. So this is now a PFH. Now, what are the confirmations of this? You know, we have of course the finding out of the moving averages. We have price coming outside of a Bollinger Band, price within an extreme region. You know, all these things are there, hitting all the confirmations of a level 3. You know, so this is a new PFH, peak formation high. But is it an anchor? We don't know yet. We don't know yet, not until we get a level. So coming out of the peak formation high, we have, of course, one-legged peak formation high, which is really weird. And then the price comes out of it, right? So PFH price comes out of it. We don't know if this is going to be an anchor yet, guys. Always understand this. When you have an anchor, so a peak not every peak formation is an anchor, right? What an anchor is when you have a proper anchor, you know, okay, cool, now you have a level 1 confirmation. Now you have your level 1 confirmation. This is officially your anchor. Now you know that you're looking for trades away from that. Okay, so we had in this situation a level 1 trade. So price came out of a peak, so we had a strong shift away from the peak right here. So we had a strong shift, and after that shift, this is a level 1 move, came into level 1 consolidation right here. So this is level 1, right? So this is level 1. And then price shifted out of level 1, right? Out of level 1 into level 2, and price literally dropped into level 2, right onto the 200, right on the 800 EFA. Now at this point, this happened literally on the same day, right? At this point, this is what you should be thinking. You should be anticipating that this could be a reset. Because you always look at the positioning of the moving averages. Remember what we said as well, guys, positioning. So you have the pattern, but the timing and the positioning is also key. The positioning of the 800 and the positioning of the 200, and the fact that I'm getting a peak formation. Look at this, guys. I'm getting a outside the band structure. Where is it? I'm getting price coming outside of my Bollinger Band. I'm getting this, right, coming outside. I'm also getting price go back up and also give me a second leg, right? Gave me a second leg on the next day. What do we have here? We have an intraday W, right? So the next day we have a second leg on the W, and it came back up and gave us a final close above the 13, right? Outside a band, inside a band, right? And then RSI crosses the market baseline, and it also crosses the trigger line, right? Also, we have this. We have RSI crisscross a signal line. So we had a crisscross of the signal line twice on the TDI. Finally crossed it a second time, a final time, and also crossed our midpoint, right? So we had a first leg, we had a second leg. This is definitely a new anchor. This is a reset, okay? So this is a reset. So we had oh, that's the wrong one. No, I don't want you. Oh, sugar. That's the wrong one. Because now what that does, it moves on the screen. It's not right. Anyways, that's a reset. So once we have the reset, right? So 1 second, guys. All right, I'm back. So once you have your reset, so let me just clear all the drawings, right? So this is your reset right here. So after the reset, what are you anticipating? You've had your first leg, you've had your second leg. You're now looking for a shift into level 1, right? So this is our level 1 shift right here. Right? And then we're looking for the crossover. What crossover are we looking for, guys? We're looking for the crossover of the 50 and 200 EMA. And no, so the 50 and the 13 EMA. Did it happen? Yes, it did. You see you see this arrow? There's arrows. These arrows are not random, right? This arrow actually just points. When you get a cross of the 50 and the 13, the arrow literally just points, right? So that this indicator is also there to help you identify, when you get a crossovers. But you have the cross. So what do? You take it. So this is the highest point that level 1 reached, right, before coming back below. So we take it from the highest point, and we take it to the lowest point. This is my level 1 consolidation. All right, this is my level 1. Now, outside of level 1 consolidation, what are we looking for within the range? What are we looking for within level 1, guys? Are you guys still awake? Because I know it's 21:41 now, and I know Scott said he was tired, right? But please stay with me, all right? So what are we looking for coming outside of a level 1 consolidation?
50-200 crossover.
Yeah, so we're looking for the 50-200 crossover. What else? We just the kind of we're looking for we're looking for a trade out of Asia, right? So looking for price coming out of Asia, 3 vectors down, form a W, and then we're looking for a long. We're looking to go long, right? So once you have your reset, you're looking to go long. Now, did we get a trade? Did we get a setup on this particular day coming out of Asia? We didn't, right? We didn't get a setup. I mean, there was a setup, just not the setup we're looking for, because you did have a W, right? The first leg just took place in Asia. So we had a first leg in Asia right there, and then came up, second leg out of Asia, and then closed above the 13, and that was the trade. But this is a setup, but this is not the setup we're looking for. So did we get a trade? No. I mean, we're inside, outside. We're looking for outside, inside, not inside, outside, right? We one-to-one, fantastic. But this is not the kind of one-to-ones we're looking for. This is not the kind of W's we're looking for, right? So you need to always be specific and always be disciplined when you're trading, right? You need to be willing and be ready to let a trade go, right? Yes, you may see the opportunity, but if it doesn't hit the conditions, you let it go. That's how you create consistency in an inconsistent environment, by having rules. Now, once you have your level 1 taking place, you've had your level 1 consolidation, right? You have now your level 2 coming out of level 1, and then you have the highest point, that's your level 2 consolidation, right? Now, coming out of level 2, price goes into level 3, which is right here. Now, this is our new level 3, okay? This is now level 3. So this is our new peak formation high. Right? You know, have a look at this. Check this out, guys. You have vector acceleration into level 3. You always, like, level 3 is the most aggressive moves, right? To get vector acceleration, these big fat bullish candles induce a lot of traders to go long. And then they literally pull price back really fast. Really fast. They pull away. Okay, so this is where your trapping is. Level 3 is where trapping takes place. You have your one leg outside of the band, right there. Right, because the only reason that RSI is going to go out of the band is if there's a lot of momentum. That's why RSI goes out of the band. Like you see where RSI went out here, it's because there was a lot of momentum here, massive momentum, right? So there's a lot of momentum moving into level 3, comes back, closes below the 13. We're anticipating a second leg, which it gave us, which is below, right? Right, and then we have price come back and close below the 13, right? That's our close. So now we're coming out of level 3. Now, coming out of level 3, guys, what are we looking for? We're looking for a shift. We're looking for a shift, right? Did we get the shift? Yes, we did. This is the shift right here. This is our shift. Okay, that's our shift. Now, when you see the shift, what does level 3 turn into? When you see a shift, level 3 turns into level 1. This is level 1. This is level 1 consolidation. Okay. We have a 1350 crossover where the arrow is, right? Boom, done. Moving to Asia. Moving to Asia. Now, coming out of level 1, what are we looking for? Now, we're looking for a decimation trade. We're looking for price to come out of Asia, give us an M right at the top, right? Very beautiful M at the top. And then we take the trade once we have a confirmed entry. Here's what they did the next day. And this is today, actually. This is EuroCAD. Right, is EuroCAD. This is peak formation high. This is level 1. Let me just label this so you guys don't miss it. Right, so this is level 1. So we're looking for a short opportunity in level 1. Nothing else. We're looking for a short opportunity in level 1. So here's what happened, right? You know, we had the induced. So they'll sometimes do this. So you get Asia, right? And they're going to come down out of Asia in order to grab the pending orders down there. And they're going to take it up to grab the pending orders up here. And they're going to trap up there and they're going to take it away. Like, it's just, that's the pattern, right? So they came out of Asia, they induced. Now you see a W here. Is this a trade? Is this a trade? Is this a setup? You're looking at this in the morning. You're seeing a W is forming right in front of you. Right? You see 3 vector candles, right? Are coming out. So this is Asia, right? But you see, you know, 3 vector shift. It's not exactly coming out of Asia, but you see your 3 vector candle. This is why it's important to stick to the rules, right? This is Asia. You see 3 vectors. You see 1 leg outside the band. Okay, now 1 confirmation is met. 2 confirmation is met. Now, what else? We're looking for a close above. 3 confirmation is met. We're looking for a close below. 4 confirmation is met. Now we're looking for the second leg to be inside the band, but the second leg is just coming outside the band. So my 5th confirmation is not met. And then I get a close above. Right there. Do I take this trade? No. I don't take this trade. I don't take this trade.
Walter, I have a quick question.
Go for it.
So don't we just trade away from the peak? So even if there's like a W formation here, we don't.
Exactly. So number 1, I don't take this trade because it just doesn't fit any of the confirmations. Number 2, it's trading towards the peak, right? At level 1, which you should.
Yeah, correct. Yeah.
Right. So you see this in the morning. Don't double question yourself. Don't tease yourself or tempt yourself. And trust me, I know the feeling because I was there. I've done it. Right? Don't do it. Right? Don't see this in the morning and be tempted to take this long because it's sort of outside in. You have a 3 vector. You do have your 3 vectors coming out of Asia. So it's kind of meets the conditions. So I'm just going to take it anyways and hope and try to make some money. We're not in the business of hoping or trying to make money. We're in the business of making money, right? So it's against, you don't trade against the peak. That's a rule. You never trade against the peak. This is your peak is up there. You do not trade against this peak. You should never trade against the peak, right? That's a rule you need to literally live and die by when you're trading, especially at level 1. At level 2, yes, you can take trades to the opposite direction, 100%, right? Level 2, you can trade both directions, but at level 1, under no circumstances should you trade against the peak. Always trade away from the peak. But what happened is this, right? This is Asia, right? This is the high of Asia. If you waited up until the evening, right, this is now the setup. I have a vector acceleration to the high, 1, 2, 3. One leg outside the band. Price came down, closed below Asia. No, closed below the 13. Came up. I didn't really get a clean close above the 13, right? I didn't get a clean. This is another half a Batman. Yeah, it does that. This is a half a bat, right? A half a bat is like a one-legged M, is a disabled M. If you see a half a bat the other way, is a disabled W, right? These are actual, you can actually trade these, right? But we need to teach you guys the confirmations for them. But this is a half a bat confirmation. I get a nice close right there, right? I have one leg there, right? I have this, I have my RSI crossing the baseline, right? Crossing the trigger line. All of this is done. All the confirmations are there. You can take the short. You can take the short. Right? Even better if it came out inside, outside, and then came back in. This is what you're looking for. If you're looking at this personally, you don't recognize the half the back confirmations, then of course you wouldn't trade this because it just doesn't meet your guidelines. It doesn't give you your close above, your second close above. It doesn't give that to you. And if one of the rule isn't there, you do not take the trade. If a rule isn't there, you don't take the trade. That's how disciplined you need to be, right? But this itself is a valid setup. We just need to teach you guys what a half a bat is, which we'll do later on. Okay, but we got a shift. We got a decimation, level 1 decimation. Beautiful, right? So now prices come out of level 1, away from the peak on ECAD. When I'm going into Asia in the evening, right? So when I'm moving into Asia. So now what do we have here? What do we have? We have a level 1 consolidation, level 2 consolidation. We also have a 50 and a 200 crossing over. If you saw this trade today, like this was a very good setup, right? We have 50, 200 crossover right there. Level 2. Okay, done. Now, once you see price come out of level 1 and you didn't have a trade, you move on. Like over time, once we're going to do more sessions over time, of course. Once we give you guys more setups, like level 2 setups, level 3 setups, then you can start building your portfolio of setups to take. Now you know, okay, cool, it's level 2, this is what I'm looking for. Level 3, this is what I'm looking for. But now what I've shown you guys is what to look for in level 1. So once you've seen level 1 is taking place in the H1, level 1 is over, you move on. Find the next level 1 move, right, on a different pair. Now, we could look at your dollar CAD because there's another pair I looked at today. This is an interesting one. Actually, no, we're not going to look at dollar CAD tonight. It's already 21:53. I'm going to hand it back to you guys if you have any questions for me. So does anyone have any questions? Anything that isn't clear to you? Are you Scott, are you clear on the levels now? Are you clear on how to identify the levels?
Yeah, mate, a lot clearer. Definitely getting the hang of it. I think it's gonna come. The more I look at it, the easier it will get, really. But no, a lot clearer than where I was before we started. Yeah,
like this is like there's no shortcut to being able to identify levels. You just gotta put in the time. You gotta, like this homeworks. I don't just say homeworks because it's pleasurable. No, it's it's like you gotta do. You need to be doing that without even someone saying you have to do it. That's how committed you need to be. Like every day, you need to be doing some charting. Every day you need to be trying to identify levels every single day. Okay, so we can look at the homeworks now. So this is Chris, Euro USD. This was actually a really nice setup coming out of Asia. You know, we had price anchored right there, beautiful. This is the M15, right? So I had a row with tracks on the if you look at this on the 5 minutes time frame or the 1 minute time frame, this is going to be a nice W right there, right? You know, we had price come out of my Bollinger Band. Price is actually at an extreme down there as well. I can see it on the green line. The green line is the 20% line, and then it came, shifted on the same day. Right, it's important this happens on the same day. If you, for example, you have price comes down, right, and it doesn't really shift, and it does this like for like 20 pips, and it goes into Asia, this is not an AFP. This is not an AFP. For an AFP on the same day, you want to see a strong move down to induce, and you want to see a strong shift away from that, and a close, and that close has to, the distance between the close and the peak needs to be a minimum of or around 50 pips. You can have 45 on Euro USD. Of course, some pairs you can have 45, but 50 is the average. If you have 30, no. 20, no. That's not an AFP. Okay, so we got an AFP. Beautiful, right? Big shift. This shift from year to year is around 45 pips, Euro USD, right? And then we went into range. What are we looking for the next day? We're looking for a W. One leg outside, one leg inside. But in this situation, this is not a confirmed entry. Why is this not confirmed? Because we have both legs outside of the band. I have both legs outside of the band. What else? I don't have a free level push coming out of this. Is my Asia, right? Okay, I have one, I have two. I don't have free level push. I don't have free vectors coming out of Asia. I mean, you could say this is a vector, okay, free vectors right there. But do I have an obstruction? No, I don't. Again, this is an example of I have a bat, right? Which you will learn this over time. But this is not a W. This is not a confirmed W. This is not what you guys should be looking for. Okay. So this is not a W, right? It really isn't a W because we have two legs outside of the Bollinger Band, which is not a W. But we do have the decimation coming out of that, out of level 1. We have the decimation. And then price goes into the range for level 2. Okay. So it's a good delivery, Chris, but this is not what you should be looking for, right? It's an example of what not to look for. Okay, and then I believe I believe there was another one. I believe it was Lewis, right? Yeah, so Lewis, I'm just gonna say this, please from now on, don't use TradingView. Use MT4, please. Right.
I only used TradingView just because I was at work and it's the only thing you can get on the computer.
I see. Do you have TradingView on your laptop? I mean, MT4 on your laptop?
Yeah, I'm trying to get it downloaded on my computer at home. I'll do that as we go from now on. No
worries. Yeah, MT4. Use the templates that was given because those templates, like you need to adjust yourself to it. They make life so much easier for you. All right. So
yeah, cool.
Pound USD. Let's see. So you had this is a 15 minutes time frame or 15 minutes time frame. Price coming out of Asia. You know, we had. Do we get a free level shift? So this is Asia. Yeah, we did have a free level shift. We had 1, we had 2, and then we had 3. All right. And we had 1 leg outside the band. Beautiful. Close above, close below. Nice. I can't see clearly. Is this the TDI? This is like a really weird TDI. So this is my band, right? This is why I said use the MT4 because this is like, so I can't see the RSI. I think this is the RSI line. And it looks like the RSI for the second leg came outside of the band. So straight away, this is not a setup, right? You need to have an outside in. Right? So straight away, this is not a setup. And plus, I don't know if this is away from peak because I don't know what level this is in. This could be a level 2, this could be a level 3, I don't know. I just see Asia, I see a W, I see a move, and I see price go back into Asia. The next day, same thing, right? So I don't know what level this is in. I need an intraday perspective. I need to know what happened yesterday, the day before that, to know and to be able to identify what level this is. Let's move on to the next because he sent quite a few. All right, so
yeah, mate. None of them are within an intraday thing.
Okay.
I was just looking for the decimation trade, so
right.
they're all just
always like levels. Like one thing that makes the decimation an important trade is the fact that it takes place away from an anchor or peak formation low, right? That's what makes, and you have an intraday W, right? This is important. You have an intraday W or an intraday M, and you have a big shift on the same day away from the low, so at least 50 pips, right? These are the preconditions for the trade, right? So as well as conditions on the actual day, preconditions are just as important. So you need to make sure your preconditions are met before you know that, okay, now for the day I'm looking for. So you're looking at two things. You're looking at the precondition and you're looking at the condition for the day of the trade. And those need to, they need to match up, okay?
Yeah.
That's why I need to see the precondition to know if that meets first. But yeah, I mean, if they're all the same, then yeah, I can't really do much with these then. Yeah, because the TDI is not clear either. The TDI is like really unclear. So,
no, that's okay, mate.
Yeah, try to use templates, please, on MT4.
Yeah, now I've got a better understanding. I'll do some more and get them over.
Perfect. All right, so yeah, so that's just you know, obviously you guys that actually did the homework, you know, thank you very much. Shows you guys are really serious because the homeworks are very important. You know, you need to be you cannot cheat the system. You need to put in the time. You need to put in the work. You know, the way that I'm finding these levels, it didn't come overnight. You know, I had to train my eyes and adjust my eyes to seeing these levels over time, right? You know, so guys, please, you know, after this session, I'm not going to send in the homework tonight. So just whenever you do an analysis, if you want to know if it's right, put it in a group and I'm going to look at it for you. Don't be scared. One thing I'm going to say, and I said this in a workshop, you shouldn't be scared of being wrong at this stage. Don't be scared to be wrong. Like, you know, being wrong, you know, is good because, you know, when you get corrected, you know, you learn a lot faster, you learn a lot better, you know, for next time now. So don't be scared to be wrong. So put it in a group, let other people see as well. Let other people see the feedback because if you're right, other people need to learn from you. And if you're wrong, other people also need to learn as well because this is a co-learning environment. So please, I'm not going to send in homework tonight, but please look at charts periodically. And when you do find these trade setups that took place over the past 2 years, 3 years, whatever, take us, analyze it like this, break it down exactly like this, the levels, the boxes, right? And then put it in the WhatsApp group and say, look, you know, what do you guys think? Is this a good example of a decimation trade? Because the more you see this trade, the better you're going to be able to recognize it in real time. So you got to do the work. You know, go back, look at these trades, try to find it over time, and take screenshots of it. So have a drive where you actually have a lot of screenshots of these trades and label it and annotate it. Right? Look at the preconditions and then look at the conditions on the day that you were trading. Does it line up? Does it meet up? Right? These things are very important. So tomorrow we're going to be going through risk management. Brian is going to cover risk management. Brian is also going to cover trading plan because a lot of you guys are looking to go live. So to go live, you need to have a plan. So we're going to be giving you guys a trading plan. Brian is also going to cover like the broker accounts or what the best brokers to use, and also how to open, of course, the account, MT4, stuff like that. So Brian is going to go through like a lot of the, you know, the stuff that you actually needed, the preparation for you to actually be able to go live tomorrow evening. So it's very important, guys. Try to plug in tomorrow evening. And I look forward to seeing you guys as well. Some of you guys come to the next workshop. Guys, the next workshop, the people that attended the previous workshop, you guys are going to be in a different room. So you wouldn't be learning in the same room as the new people. You guys are going to be learning more setups, right? So this time we taught you guys the level 1 AFP setup. Now, the next workshop, we're going to be teaching you level 2 setups. We're going to be teaching you the peak formation setups, like 21 trade, 22 trade, box trades, all these kind of things. So the next workshop is not going to be a repetition for you guys of the previous workshop. It's going to be a build up. So we're going to be teaching you guys like more more setups at the next workshop. So if you can attend the next workshop, try to be there so you can keep building up your knowledge of this strategy. So again, guys, thanks for plugging in. Have a great night.
Cheers, Walter. Thanks, man.
Cheers, Walter.